G'day folks, it's Jim here from Forex, and it is Monday the 13th of January. I thought I'd just provide an outlook on what we might expect to be interesting in the world of trading this week. There isn't a whole heap of market moving data in the days ahead, although most of the major economies will be announcing some kind of inflation numbers this week, CPI or PPI or both. And these numbers might cause a few ripples if they come in wide of expectations. Otherwise, it's going to be mostly political headlines, obviously with the Middle East and also with Brexit in focus. Brexit's due to take place on the 31st of January, and we could see a few spikes in cable. Otherwise, the key event to watch this week is going to be the signing of Phase 1 of the US-China trade agreement. That's due to take place on Wednesday, and while the basis of this is already widely telegraphed, it could still provide some exaggerated volatility, particularly in the US dollar and also in the stock markets and of course oil and gold. But we're going to have a look at the charts, and I thought I'd start off with the dollar index actually just here. As you can see here from the dollar index, we had this resistance at around 97.10 over the holiday period, and we've since broken above that. The dollar's headed high, but it hasn't really pushed on at this stage and is still struggling to break above the 200 and then the 100-day moving average. But having said that, the daily indicators do point a bit higher, so I think for the next 4 or 5 days we should possibly be looking to buy dollars on dips, but without looking for any huge move, unless we can take out this 100-day moving average at 98 or so, in which case we could see a bit of a head of steam up towards 98.5. The weekly charts, which I can just show you here, they're not really suggesting any huge movement. The weeklies are pretty flat, not suggesting anything great, or not suggesting any great movement either way. But I do kind of like the idea that we might be heading a little bit higher and hopefully see a test of the 98.5. So what that means for the euro? Well, here we have a daily euro chart. Now we've got a choppy sideways to higher trend at the moment, but I don't really think we're going to see too much higher. We're looking to chop around, I think, for the moment between the 200-day moving average, which is 111.40, and the 100-day moving average, which is kind of tying in with this minus trend support line here. That's around 111.60. So I think really for the next couple of days, at least until Wednesday, it wouldn't surprise me to just see us chop around here. Eventually, I think the dailies don't look real flash, and I do think we might see a test of the downside eventually. And if that were to come about, then I think we're possibly looking for a run down here to sort of back down to, or I guess this support here, 110.40 or so, 10.35, and then back down here to 109.80. For the time being, I wouldn't be looking for too much beyond that, but we could see a run down to that 108.80 at some stage. On the top side, as I say, the 200-day moving average is going to be the first crucial point of resistance. But if we do break above that, I guess we could see another move back up another 100 points, this or 112.40. Don't really see that at this point in time. I don't see why the euro should gain huge strength, or equally the US dollar get too much weaker. So I'm preferring to sell the euro and buy the dollar. But having said that, as I say, in the next couple of days, just look for that range within the 100 and 200-day moving averages. Well, I'll just have a quick look at sterling. With Brexit in mind, sterling does look a tad heavy at the moment on the charts. It's just a daily chart. It does look as though it's pointing a little bit low. But having said that, on the weekly charts, as you can see, we've got some pretty solid support here. We've got the 200 week and the 100 week coming in at around 1.3, and if we get below there, the 55 week moving average is down at 128. I personally I kind of like sterling. I think once Brexit is announced and the UK is free of all the constraints from within the EU, I'd like to think that sterling can start to head a fair bit higher. It's going to be very choppy, of course, and headline driven, but this sort of 135 area is going to be pretty solid resistance if we can get back up there. But if we take that out, we can look up to this sort of 38.2 Fibo level. That's sort of 138.60 or so. I've been staying away from cable, and but I do think possibly it's now the time to start looking to buy into dips. But I would be keeping a fairly tight stop loss. If we got below this sort of level here, 127.5, I'd be out of all my positions in sterling. So I'm really looking to buy sort of between 128.5, 129.5, with a stop loss at 127, the figure, call it. The Aussie, which I tend to look at a lot. Here we are with a daily chart of the Aussie. Now it has broken back above the 200-day moving average. Let me blow this up a bit. It's broken back above the 200-day moving average, and it might squeeze a little bit higher, particularly if there's some positive noises coming out of the China trade deal with the US. Overall, though, I think with the bushfire situation, I think it's going to have quite a dramatic effect on the economy in Q4 and also in Q1. So I think the RBA are probably likely to cut. I think it's a 50-50 bet if they cut in February, but they're going to have to cut at some stage later in the year. So I prefer the downside for the Aussie still. Having said that, I think we're possibly going to be choppy range trade between sort of 68 the figure and 70 the figure. We're right in the middle at the moment. Personally, I prefer to sell rallies because I do think the economy is going to slow, and there have been some pretty bearish press articles about the retail sector in Australia as well recently. So I think all things considered, with the slowing economy, with the bushfires, looking to sell into strength is probably the way to go. Elsewhere, oil looks interesting. We had this key reversal last week. This was just after the tensions had eased somewhat between the US and Iran, and it's caused a key weekly reversal, taking us back below the 100-week moving average. So it would suggest that there's possibly more downside to come. The 200-week is currently sitting at sort of 55, 10, 15, and the sort of rising trend support at 54.25. So I would say that right now, looking to sell. This is West Texas Intermediate. Looking to sell at sort of $60 per barrel. 60, 65 is the 100-week moving average, with a stop loss possibly above this high here, or more conservatively just above 61. But selling above 60, looking for a run back down towards sort of 56, 55. Where else? Gold. Gold has been pretty choppy and is kind of headline driven, as it always is, I guess, but it's come back to sit at 1555, having traded above 1600 last week, so it's highly volatile. The 4-hour indicators are now pretty neutral. I don't think anyone really knows what to do. The dailies do look as though they're topping out though, so my view, the weeklies are heading higher, but with some bearish divergence, as you can see. So my view is probably looking to sell gold. If you could sell it around, just leave an order, sort of 1575, 1580, something like that. Hope for a spike up. To keep a stop loss firmly in place above that high there. But I do think we might we might see a move back down here towards the 1512, 1510, which is the major Fibo level. There are minor Fibos coming in at sort of 1545. We have been below there, but then it's sort of 1525 and down at sort of 1510. So I kind of like to sell gold, but it is pretty volatile, and you need to have deep pockets for that one. And then finally, we'll have a quick look at the stock markets. Well, this is the S&P, which made yet another new high last week. Came off a little bit on Friday after the disappointing non-farm payrolls, but I'm not sure. I'm not sure it's worth trying to pick a top on it yet. Although, having said that, the 4-hour charts do look a little bit heavy. and the dailies are non-committal. The weeklies are still look very strong, but they are becoming overbought, and there is some mild bearish divergence here. So I suspect we'll tread water until Wednesday, and it could be a case of buy the rumour, sell the facts once the trade deal is announced. So personally, I would consider selling it or around here, I suppose, but with a tight stop above 30. Was it above 3,300? So that would be my idea for a trade there. But you know, it's lost a lot of people a lot of money trying to pick tops in this in this uptrend for, oh gosh, how long now? Well, you can go back 10 years or 12 years. So it takes a brave man to do it, but I think right now it might be a bit of a trade. I wouldn't be looking for too much on the downside though. This trend line comes in here. Where's that? Sort of 30, just 3,100, something like that. So you might have 170 points on the downside against a sort of 35 point stop loss. So it's something worth considering anyway. Not that I'm overly keen myself. So anyway, that's about it for this week's weekly outlook, and I'll be back next Monday. Cheers.